There's a moment in every trader's journey that changes everything. It's not when you discover the perfect strategy or find the Holy Grail indicator. It's not when you hit your first big win or even when you recover from your worst loss. It's quieter than that, more profound. It's the moment when you stop fighting the market and start fighting yourself. When you realize that every chart pattern, every candlestick, every price movement is just a mirror reflecting back your own discipline, your patience, your fears. Most traders never reach this moment because they're too busy chasing shadows, convinced that success lies somewhere outside themselves. You've felt this, haven't you? That gnawing frustration when a trade moves against you. That surge of excitement when you're up $50, followed by the crushing disappointment when it all evaporates. The sleepless nights staring at charts, convinced that if you just study harder, analyze more, find that one missing piece, everything will click. But here's what most traders never understand. The breakthrough isn't technical, it's psychological. And it happens in the space between what you want the market to do and what you're willing to accept it will do. The illusion that destroys most traders begins with a single seductive thought: speed. They look at their account balance, whether it's $100 or $10,000, and immediately start calculating how fast they can multiply it. They've seen the screenshots on social media, the stories of traders turning small accounts into fortunes seemingly overnight. Their minds race with possibilities. Double it this week, quadruple it next month, quit the job by Christmas. This fantasy feels so real, so achievable, that it becomes the foundation of their entire approach. But here's the cruel reality. Speed in trading is an illusion. It's a mirage that appears when you're desperate, when you're impatient, when you haven't yet learned that the market rewards those who think in years, not days. The traders who chase speed inevitably crash. They overtrade because they can't sit still. They risk too much because small gains feel insignificant. They abandon their rules because discipline feels too slow. And when they lose, which they always do, they tell themselves it was bad luck, a manipulated market, anything except the truth. The truth is that their mindset was poisoned from the start. They came to trading like gamblers entering a casino, not like farmers planting seeds. They wanted to extract wealth immediately rather than cultivate it patiently. And the market, which has been humbling impatient traders for over a century, delivered its inevitable lesson. You're not weak if you've fallen into this trap. You're human. Every successful trader has walked this path of illusion before finding their way to something deeper. The difference is that some learn from the pain, while others just repeat it with different strategies, different time frames, different excuses. The market doesn't care about your timeline. It doesn't bend to your financial pressures or your desperate need for validation. It simply is. And your job is not to conquer it, but to align with it. This alignment begins with a fundamental shift in how you perceive time. Most traders think in trades. Winners think in decades. They understand that wealth in trading isn't about hitting home runs. It's about getting on base consistently, game after game, season after season. They know that compound growth, the eighth wonder of the world according to Einstein, works its magic not through dramatic explosions but through steady accumulation. Consider the mathematics of patience. If you could grow your account by just 3% per week, most beginners would scoff. On a $100 account, that's $3, hardly life-changing. But mathematics doesn't care about your feelings. At 3% weekly growth, that $100 becomes over $15,000 in 2 years. Not through luck or genius market calls, but through the relentless application of small, consistent edges. The traders who achieve this kind of growth share a common characteristic. They've developed what I call the compounding mindset. This isn't just about money growing over time. It's about understanding that every skill, every habit, every moment of discipline compounds into something greater. Each time you resist the urge to overtrade, your patience muscle grows stronger. Each time you cut a loss without emotion, your detachment deepens. Each time you stick to your plan despite temptation, your character hardens into something unbreakable. But developing this mindset requires confronting uncomfortable truths about human nature. We are wired for immediate gratification. Our brains evolved to seek quick rewards and avoid immediate threats. In the modern trading environment, this ancient programming becomes our enemy. The dopamine hit from a quick profit creates addiction. The pain of a loss triggers fight or flight responses. Our emotions, designed to keep us alive in physical environments, become weapons of self-destruction in psychological ones. The breakthrough moment comes when you realize that trading isn't about predicting the future. It's about managing your present state of mind. You cannot control whether your next trade wins or loses, but you can control how you respond to that outcome. You cannot predict market movement, but you can predict your own behavior if you've trained it properly. This shift from external focus to internal mastery is where real trading begins. Think about the story of Richard Dennis, the legendary commodities trader who started with $1,600 borrowed against his credit cards. He didn't become a millionaire by taking massive risks or finding secret patterns. He developed a systematic approach and followed it religiously, treating each trade not as a bet on market direction, but as an execution of proven probabilities. His success wasn't about being right more often than others. It was about being disciplined more consistently than others. This brings us to a paradox that confuses most beginners. The best traders are often wrong more than they're right. They lose on individual trades regularly, sometimes for weeks at a time, but they win because they've learned to cut their losses quickly and let their profits run. They've trained themselves to be comfortable with uncertainty, to embrace the fact that they cannot predict short-term market movements with any reliability. Most traders never develop this comfort with uncertainty because they mistake trading for a game of prediction. They analyze charts looking for certainty, for signals that tell them exactly what will happen next. When reality doesn't match their analysis, they feel frustrated, confused, even betrayed by the market. But the market never promised certainty. That was an assumption they brought to the game. The traders who break through understand that uncertainty isn't a bug in the system. It's a feature. It's what creates opportunity. If market movements were predictable, there would be no edge to capture, no profits to be made. Uncertainty is the source of all trading profits, which means learning to dance with it rather than fight against it. This dance requires a different kind of intelligence than most people expect. Not just analytical intelligence, but emotional intelligence. The ability to remain calm when others panic, to stay patient when others rush, to think clearly when others are clouded by hope or fear. This emotional intelligence isn't innate. It's developed through practice, through deliberate exposure to the very situations that test your composure. Every losing trade is a training session for your emotions. Every moment of frustration is an opportunity to build resilience. Every temptation to break your rules is a chance to strengthen your discipline. The traders who see it this way transform pain into power. Those who don't see it this way just experience pain over and over until they quit. The difference between these two groups isn't intelligence, education, or even starting capital. It's perspective. It's the ability to see temporary setbacks as permanent education, to view losses as tuition payments in the University of Market Wisdom, to understand that every professional trader's journey includes blown accounts, devastating mistakes, and moments of doubt so deep they question everything. But here's what separates the professionals from the casualties. When faced with these inevitable challenges, they don't ask why the market is being unfair to them. They ask what the market is trying to teach them. They don't blame external circumstances for their failures. They look inward for solutions. They don't abandon their approach at the first sign of difficulty. They refine it, improve it, evolve it. This process of continuous improvement requires a level of honesty that most people find uncomfortable. It means admitting when you're wrong, not just about market direction, but about your own behavior. It means acknowledging that your emotions, not market manipulation, are usually responsible for your losses. It means accepting that success will come slower than you want and require more work than you expected. This process of continuous improvement requires a level of honesty that most people find uncomfortable. It means admitting when you're wrong, not just about market direction, but about your own behavior. It means acknowledging that your emotions, not market manipulation, are usually responsible for your losses. It means accepting that success will come slower than you want and require more work than you expected. But here's where most traders stumble. They think honesty means beating themselves up after every loss. They confuse self-awareness with self-punishment. They believe that feeling bad about mistakes will somehow prevent them from happening again. This couldn't be further from the truth. Emotional self-flagellation doesn't create discipline, it creates trauma, and traumatized traders make even worse decisions than confident ones. True honesty in trading is clinical, not emotional. It's the ability to look at a losing trade and ask practical questions without judgment. Was my entry based on my rules or my emotions? Did I size the position according to my risk management plan? Did I cut the loss when my stop was hit, or did I move it hoping for a reversal? These questions aren't accusations, they're investigations. The goal isn't to feel bad about mistakes, but to understand them so completely that they become less likely to repeat. This brings us to something most traders never consider: the relationship between self-forgiveness and trading performance. The traders who learn to forgive themselves quickly for mistakes often improve faster than those who hold grudges against themselves. Why? Because forgiveness frees up mental energy for learning rather than wasting it on regret. Think about a child learning to walk. They fall constantly, sometimes painfully, but they don't spend time judging themselves for falling. They simply get up and try again. Each fall teaches them something about balance, about momentum, about the relationship between their intention and their ability. They're learning, not failing. This is the mindset that transforms trading performance. But somewhere along the way to adulthood, most of us lose this natural learning ability. We develop fear of judgment, both from others and from ourselves. We start seeing mistakes as character flaws rather than data points. We begin avoiding challenges rather than embracing them. And when we bring this damaged relationship with failure into trading, the market amplifies it mercilessly. The breakthrough moment often comes when traders realize they're not actually trading the market. They're trading their own psychology. Every entry, every exit, every moment of hesitation or impulse is a reflection of their internal state. The charts don't lie, but they also don't tell the whole truth. The truth is in the space between what the chart shows and what you do about it. Consider two traders looking at identical setups. Same time frame, same indicators, same risk-reward ratio. One sees opportunity and takes the trade with confidence. The other sees the same setup but hesitates, doubting whether it's really valid. They eventually enter, but late, with poor timing and shaky conviction. When the trade moves against them, the first trader cuts the loss cleanly. The second holds on, hoping it will turn around, turning a small loss into a large one. Same market, same setup, completely different outcomes. The difference isn't in the technical analysis, it's in the psychological preparation. The first trader has trained themselves to act decisively when their criteria are met. The second is still fighting internal battles that prevent clear execution. This is why studying charts and indicators, while important, only takes you so far. At some point, every serious trader must turn their attention inward. They must study their own patterns of thought and behavior with the same intensity they once reserved for price patterns. They must learn to observe their emotional reactions without being controlled by them. The process isn't comfortable. You'll discover things about yourself that you'd rather not know. You'll realize that your biggest enemy isn't the market or other traders or institutional manipulation. It's the voice in your head that whispers doubt when you should be confident, that screams urgency when you should be patient, that promises certainty in an uncertain world. But here's the beautiful paradox. Once you truly accept that uncertainty is the only certainty in trading, everything becomes simpler. You stop looking for guarantees and start executing probabilities. You stop trying to predict every move and start responding to what actually happens. You stop fighting the market and start dancing with it. This dance requires a different kind of rhythm than most people expect. It's not the frantic pace of day trading or the adrenaline rush of scalping. It's more like the steady heartbeat of someone at peace with themselves. Measured, consistent, unhurried. The kind of rhythm that can be maintained for hours, days, years without burning out. Most traders never find this rhythm because they're too busy chasing the rhythm of others. They see someone making money with high-frequency trading and think that's the only way. They watch a swing trader capture a massive move and abandon their own approach to copy theirs. They're always adapting to external influences rather than developing their own internal compass. The traders who break through learn to tune out the noise. They stop following every guru, stop jumping from strategy to strategy, stop looking for validation from others. They develop what I call internal authority, the ability to trust their own process even when others question it, the confidence to stick with their plan even when it's not working in the short term. This internal authority isn't arrogance. It's not stubborn refusal to adapt or learn. It's the quiet confidence that comes from knowing you've done the work. You've backtested your approach, you've practiced it in simulation, you've refined it through real market experience, you've documented what works and what doesn't. You've built something solid, something that can withstand the inevitable storms of losing streaks and market volatility. But even with internal authority, doubt creeps in. It's human nature. After a string of losses, even the most disciplined traders question themselves. Is my edge still valid? Has the market changed? Am I missing something obvious? These moments of doubt are not weaknesses. They're opportunities for deeper learning, for refinement, for growth. The key is learning to distinguish between productive doubt and destructive doubt. Productive doubt asks questions that lead to improvement. Am I following my rules consistently? Are my risk parameters still appropriate for current market conditions? Is there something in my process that could be optimized? Destructive doubt attacks your fundamental capabilities. Maybe I'm just not cut out for this. Maybe I'll never be successful. Maybe I should just quit. Productive doubt is a tool. Destructive doubt is a weapon turned against yourself. Learning to recognize the difference and respond appropriately is a crucial skill that separates long-term survivors from those who eventually give up. The market has a way of testing this skill repeatedly. Just when you think you've mastered your emotions, it presents a scenario you've never faced before. A gap down that wipes out your stop. A news event that reverses your position instantly. A winning streak that makes you feel invincible, followed immediately by losses that humble you completely. These tests aren't random. They're systematic. The market rewards preparation and punishes improvisation. It rewards consistency and punishes emotional reactions. It rewards patience and punishes desperation. Understanding this systematic nature of market feedback transforms your relationship with both wins and losses. Wins are no longer reasons to celebrate your genius. They're confirmation that your process worked in this particular instance. Losses are no longer reasons to question your abilities. They're feedback about how well you executed your plan. This shift in perspective is subtle but profound. It removes the emotional extremes that destroy most traders and replaces them with steady evaluation and continuous improvement. But perhaps the most important realization is that trading success isn't really about trading at all. It's about becoming the kind of person who can handle uncertainty without anxiety, who can make decisions without needing guarantees, who can accept responsibility without self-judgment. These qualities serve you far beyond the markets. They transform how you approach every challenge in life. The trader who learns patience in the markets becomes more patient in relationships. The trader who develops discipline with money becomes more disciplined with time and energy. The trader who accepts uncertainty in price movements becomes more comfortable with uncertainty in career changes, family decisions, and life transitions. This is why trading, when approached correctly, becomes a form of personal development. Not because it makes you rich, though it can, but because it forces you to confront and overcome the psychological barriers that limit you in every area of life. It demands that you grow as a human being, not just as an investor. The breakthrough moment, then, is not really about trading at all. It's about identity. It's the moment when you stop trying to be someone who trades and start becoming someone who is disciplined, patient, and emotionally intelligent. Someone who can make decisions based on logic rather than emotion. Someone who can stick to their principles even when it's uncomfortable. This identity shift doesn't happen overnight. It's forged through countless small moments of choice. The choice to stick to your stop loss even when you're convinced the trade will turn around. The choice to wait for your setup even when you're bored and want action. The choice to risk only what you can afford even when you're tempted to bet bigger. Each of these moments is an opportunity to reinforce who you're becoming. And here's what most people miss. The market doesn't care about your financial goals, your timeline, or your personal circumstances, but it responds immediately and accurately to who you are being in each moment. If you're being patient, it rewards patience. If you're being greedy, it punishes greed. If you're being disciplined, it validates discipline. If you're being emotional, it exploits emotion. This is why the most successful traders often seem almost detached from their results. They care deeply about their process but hold their outcomes lightly. They celebrate good execution more than profitable trades. They worry more about breaking their rules than losing money. They understand that if they become the right kind of person, the results will take care of themselves. The path to this understanding is different for everyone, but it always involves the same fundamental elements: honest self-assessment, continuous learning, emotional regulation, systematic thinking, and perhaps most importantly, the patience to let growth happen at its own pace rather than forcing it to match your timeline. The traders who try to rush this process inevitably fail. They want the results without the transformation. They want the profits without the personal growth. They want to master the market without first mastering themselves. But the market doesn't work that way. It demands authenticity. It insists on congruence between who you are and how you trade. This congruence is what creates the unshakable confidence that characterizes truly successful traders. Not confidence in their ability to predict the market, but confidence in their ability to respond appropriately to whatever the market presents. Not confidence in their next trade, but confidence in their process over hundreds of trades. Not confidence in their intelligence, but confidence in their discipline. When you develop this kind of confidence, something magical happens. Trading becomes easier, not because the market becomes more predictable, but because you become more reliable. Your reactions become more measured. Your decisions become more consistent. Your emotions become more stable. You transform from someone who's at the mercy of market volatility to someone who can navigate it with grace. This transformation is what I call the breakthrough moment. Not a single instant of realization, but a gradual shift from external focus to internal mastery, from trying to control outcomes to controlling responses, from fighting the market to flowing with it, from seeking certainty to embracing probability. But this transformation isn't a destination. It's a way of being that must be cultivated daily, trade after trade, decision after decision. The breakthrough moment isn't when you finally get it and never struggle again. It's when you realize that the struggle itself is the teacher, and every challenge the market presents is an opportunity to deepen your mastery. Most traders think success means never feeling fear or doubt again. They imagine that profitable traders wake up each day with unwavering confidence, never questioning their decisions, never feeling the sting of losses. This couldn't be further from the truth. The most successful traders feel everything you feel. They experience the same moments of uncertainty, the same flashes of greed, the same whispers of doubt. The difference is in how they respond to these feelings. They've learned to observe them without being controlled by them. They feel the fear but take the trade anyway when their rules dictate it. They notice the greed but stick to their position sizing regardless. They acknowledge the doubt but trust their process despite it. This is what I call emotional fluency. Not the absence of emotion, but the ability to read your emotional state like a gauge on your dashboard. When fear spikes, you know you might be risking too much or trading outside your comfort zone. When greed whispers, you know you might be abandoning your risk management. When doubt creeps in, you know it's time to review your rules and ensure you're following them faithfully. The market becomes a constant teacher in emotional intelligence. Every trade is a lesson in self-awareness. Every loss is feedback about your psychological state. Every win is validation of your discipline, not your prediction ability. This reframing transforms trading from a battle against the market into a partnership with it. But here's where most traders get trapped. They think they can shortcut this emotional development. They search for strategies that require no psychological work, systems that supposedly remove emotion from the equation entirely. They want to become trading robots, executing signals without feeling anything. But emotion isn't the enemy. Uncontrolled emotion is. Emotion provides valuable information. Fear can signal that you're taking inappropriate risks. Excitement can warn you that you're about to overtrade. Frustration can indicate that you're forcing trades rather than waiting for your setups. The goal isn't to eliminate these feelings, but to use them as data rather than letting them drive your decisions. This requires a level of self-honesty that most people find uncomfortable. You must be willing to admit when fear made you exit early, when greed made you hold too long, when frustration made you chase a trade you should have avoided. This isn't about self-judgment, it's about self-knowledge. You cannot change what you refuse to acknowledge. The traders who master this self-awareness develop something remarkable. They become predictable to themselves. They know how they'll react in various situations because they've studied their own patterns extensively. They know their triggers, their weaknesses, their tendencies under pressure. This self-knowledge becomes their greatest edge. When you know yourself this deeply, you can prepare for your own reactions. You can set up safeguards against your known weaknesses. You can structure your trading environment to support your discipline rather than test it. You stop being surprised by your own behavior and start managing it proactively. Consider the trader who knows they tend to hold losing trades too long. Instead of hoping willpower will save them next time, they set automatic stops that execute without their input. They remove the emotional decision from the equation entirely. They don't fight their tendency. They plan around it. Or the trader who knows they overtrade when bored. Instead of trying to suppress the urge, They schedule specific times for market analysis and chart review. They create structured activities that satisfy their need for engagement without jeopardizing their account. They channel their energy constructively rather than destructively. This is practical psychology applied to trading, not abstract theories about market behavior, but concrete strategies for managing your own behavior. The most successful traders are often the ones who know themselves best, not necessarily the ones who know the market best. But self-knowledge without self-acceptance leads to self-sabotage. Many traders discover their weaknesses and then hate themselves for having them. They fight against their natural tendencies rather than working with them. This internal war consumes mental energy that should be devoted to execution and analysis. True mastery comes from accepting yourself completely while still working to improve. You acknowledge your impatience without judging it. You recognize your fear without condemning it. You observe your greed without hating it. This acceptance creates space for growth rather than resistance to it. The market reflects this internal state back to you constantly. When you're at war with yourself, your trading becomes chaotic. When you're at peace with yourself, your trading becomes fluid. When you accept your limitations while working to expand them, your results become consistent. This brings us to something most trading education completely ignores: the role of identity in trading success. Every trader operates from a sense of who they are, whether conscious or not. Some see themselves as gamblers seeking quick thrills. Others see themselves as analysts trying to predict the future. Still others see themselves as victims of market manipulation. But the consistently profitable traders see themselves differently. They see themselves as business owners managing risk, as craftsmen perfecting their skill, as students always learning, as professionals executing a proven process. This identity shapes every decision they make. Your identity determines what feels natural versus what feels forced. If you see yourself as someone who takes big risks, conservative position sizing will feel wrong. If you see yourself as someone who needs to be right, cutting losses quickly will feel like failure. If you see yourself as someone who deserves quick success, patient wealth building will feel like punishment. The breakthrough moment often involves a fundamental shift in identity, from gambler to business owner, from predictor to reactor, from victim to creator, from someone who fights the market to someone who flows with it. This identity shift changes everything because it changes the lens through which you see every situation. The breakthrough moment isn't a destination you reach and then coast from. It's a way of being you must choose again and again, trade after trade, moment after moment. It's the quiet understanding that trading success was never about conquering the market. It was always about mastering yourself. Every chart you'll ever see is really a mirror. Every trade you'll ever take is really a test, not of your ability to predict price movements, but of your ability to remain calm in uncertainty, disciplined in chaos, patient when everything inside you screams to act. The traders who transform their lives through trading aren't the ones who found the perfect system. They're the ones who became the kind of person a perfect system could work through. They stopped trying to change the market and started changing themselves. They realized that the breakthrough they were seeking was always within their control. This isn't just about trading. It's about who you become in the process. The patience you develop waiting for setup serves you in every relationship. The discipline you build managing risk strengthens every area of your life. The emotional intelligence you cultivate reading your own reactions makes you better at reading others. If this changed how you see trading, subscribe for more lessons in patience and discipline. The journey we've shared today is just the beginning. Now tell me in the comments, what's the biggest mindset shift you've made so far? Your breakthrough moment might be exactly what another trader needs to hear.